If you're about to withdraw, I want you to break before you tell your boss, your kids, or even your topper friend. Let me put it this way. The pressure starts because the minute citizenry know you're withdraw. Can you help us with a down payment? You've got your pension off now, right? You're unloose. You can watch the grandkids every day. Here's the bottom line, and buttocks the scenes, taxes, Medicare premium, and even scam artists can start chewing away at that nest egg you worked 30 or 40 years to build. Today, I'm going to walk you through 10 quiet upgrades that smart retirees make before they tell anyone, so you keep control of your money, your clip, and your peace of mind. Upgrade number idiot is the one most nobody does, and it's the ground so many surviving partner end up give higher taxes on less income. So, arrest with me for that. Hey there, I'm Uncle John, and welcome back to Uncle John Fiscal. If you're 55, 60, 65, you power be staring at that retirement date circled on the calendar, wondering, is it genuinely safe to pull the trigger? Here's the truth. In fact, retirement isn't just quitting your job. It's the slow turning of dials, tax dial, health aid dials, household dial. Sometimes the people who withdraw smoothly don't just flip a switch. They quietly upgrade the structure of their life before they announce the big news. Let me ask you, if your payroll check stopped tomorrow, do you cognize precisely which story your very first retirement paycheck would seed from and what that choice would do to your taxes and Medicare 2 years from now? If that feel fuzzy, this picture is going to aid a lot. Now, this is education, not personal advice. Your situation is unique, so talk with a qualified professional before you act. All right, let's get into the 10 upgrades. Really, upgrade number 1, your retirement paycheck plan. How you'll really pay yourself once the work paycheck stops. In 2026, the norm Social Security check for a retired worker, is about $2.71 per month, about $25,000 a year. For many of you, that doesn't even cover the basics once you add lodging, food, insurance, and a little traveling. So the gap has to come from somewhere. Also, 401ks, IRA, Roth accounts, brokerage firm account, maybe a pension. The order of magnitude you draw from these can mean thousands of dollars in taxes over your lifetime. Here's the essential thought, and again, this isn't a pattern for everyone, but it's a powerful starting point. To be honest, in your early retirement years, before required lower limit distributions and sometimes before societal security actually, you may want to tap taxable accounts and perhaps do small Roth transition from your traditional accounts. What we're seeing is, later on, when social protection and RMDs kick in, you may want to rely more on Roth and cash, so you're not pushed into higher tax brackets. In a minute, when we're talking about Medicare, you'll see how this withdrawal order can also keep your premiums from jumping hundreds of dollars a month. Real-life snapshot. Return a couple in their early 60s just retire with $800,000 in traditional IAS, $150,000 in a Roth, and $100,000 in a brokerage account. Here's why this matters. If they yank $80,000 a 12 month straight out of the IRA from kind of day one, they may push themselves into higher brackets and set up painful RMDs later. Definitely, while their income is temporarily lower, they can smooth out their taxes for life. If instead, they blend withdrawals from the brokerage and do modest Roth conversions. Before you tell anyone you're retired, you lack a simple one-page design that shows how much you'll pass in year 1, which account the money comes from, which tax bracket that puts you in. This isn't about chasing an exact number. It's about not guessing. Honestly, advance figure 2 is your Social Security timing decision. Remember that norm check of about $2.71 in 2026 is just that, an average. Your welfare can be much lower or much higher depending on when you claim and how long you work. If you claim as early as 62, your monthly check can be reduced by roughly 25 to 30% compared with your full retirement age benefit. Truth is, you can get roughly 24 to 32% more than at full retirement age, depending on your birth year, if you wait until age 70. Here's the myth. Return it as soon as you can, because mixer security is going to run out. Here's the realness. Yes, the scheme has funding issue, but for people already near or in retirement, the more immediate risk is taking benefits too early and lock up in a smaller check for life. And here's the thing. Your social protection decision needs to be coordinated with 1, your partner's welfare and survivor welfare, 2, your economy and withdrawal design from upgrade 1, and 3, your health and family longevity. Before you announce retirement, at least run a few what-if scenarios. In fact, what if I claim at 62 and my spouse waits until 70? And here's the thing. What if I delay to 67 and use my savings in the meantime? You lack to see which option gives you the best lifetime income and protects the surviving spouse, not just the biggest check side-by-side year. And speaking of the surviving mate, upgrade 9 is where we truly protect the person who outlives lives the other, so don't miss that. Indeed, upgrade number tierce is your health caution plan, especially Medicare and any gap before Medicare. Usually, for many of you, healthcare will be one of your top 3 expense in retirement, right alongside housing and nutrient. Honestly, in 2026, the standard Medicare Part B premium is about $22.90 per month, up from $185 in 2025. That's nearly a 10% jump in 1 year. Here's why this matters. And if your income is higher, the IRMA surcharges can push that portion B insurance premium into the $284, $405, $527 per calendar month or more, depending on your level. Of course, so what does that mean for you? It means your retirement income choices, how much you pull from IRA, when you do Roth conversions, when you claim Social Security, can quietly push your Medicare premium hundreds of dollars higher per calendar month 2 years later, because Medicare uses your tax return from 2 years ago. If you're retiring before 65, more or less, you also need a bridge. Employer retiree coverage. If you're lucky, a spouse's program or Affordable Care Act plans where your income choice can be the difference between big subsidy or paying full price. Imagine Susan retires at 63. She has the choice between pulling $40,000 from her IRA or blending a smaller IRA back down with some cash she saved in a taxable account. Truth is, if she pulls a big chunk from the IRA, it demonstrates up as income potentially affecting both her ACA health insurance subsidies and her future Medicare premiums once she hits 65. Before telling anyone you're retired, have a written wellness aid map, how you're covered from now until 65, how your Medicare will look at 65. Do you understand Portion A, Portion B, Part D, and Medigap or Advantage? What's more, and how your income design supports premiums, deductibles, and out-of-pocket cost. Honestly, in a few minutes when we get to long-term aid, I'll show you why healthcare planning is not just about doctor visits. No doubt it's about protect your entire life savings from one long illness. Boost Figure Tetrad is your debt and housing situation. Retirement spirit very distinct when your housing costs are steady and predictable versus when you're juggling a big mortgage, a HELOC, car loans, and credit cards. What we're seeing is, here are a few questions to softly answer before you announce. Will you still have a mortgage in your 60s and 70s? If so, is the payment comfy with your retirement income after taxes and health air? Are you in a place that fit your future? Single story, manageable maintenance, near doctors and house. Do you have any high interest debt that's dragging down your monthly cash flow? So, what does this mean? Sometimes the smartest move is to downsize or refinance before you retire while your employment income hush aspect strong on paper. In fact, that can help you curl in better terms and free up cash flow. Usually, I worked with a couple, we'll call them Jim and Linda, who loved their big 2-story home. They were about to withdraw with a mortgage that ate up almost a third of their monthly income, or else of announcing retirement and then scrambling, they sold, moved into a smaller ranch-style home closer to their grandkids, and cut their housing costs by nearly half. Suddenly, retirement wasn't tight, it was flexible. At the end of the day, upgrade your housing and debt picture first, then state everyone how free you are. Usually, upgrade number 5 is your immediate payment. In your working age, you have heard keep 3 to 6 months of expenses in an emergency fund. In retirement, that rule often needs an upgrade. Think about having a true exigency reserve. 6 to 12 months of core expenses in very safe, very liquid hard cash or cash-like history, notably a sleep-at-night buffer zone, maybe another bucket you can tap in a bad stock market 12 months so you're not forced to sell investments at a loss, and a small opportunity store for when the market drops or for that once-in-a-lifetime trip you genuinely want to take. Why so much focus on cash? Often because in retirement, your payroll check is your portfolio. When the market goes down and you still demand income, having a hard currency buffer lets you ride it out or else of locking in losses. Stick around because Advanced 7 will tie this cash mind into a simpleton spending system that helps you avoid the I don't know if I can afford this feeling every clip you swipe your card. Interestingly, Upgrade Figure 6 is your long-term care program. To be honest, the one upgrade most citizenry avoid because it's uncomfortable. Right now, estimates suggest that about 70% of Americans who reach age 65 will need some form of long-term tending in their lifetime, whether that's abode health aides, assisted life, or nursing home care. And the costs aren't small. Recent data display national median costs in the U.S. like these. Here's the bottom line. A private room in a nursing home can run around $123,000 to almost $130,000 per 12 month, roughly $10,000 to $11,000 a calendar month. Assisted living oft runs about $70,000 to $74,000 a year, roughly $6,000 a month. Indeed, one major study estimated that a typical 65-year-old should plan on about $135,000 on average over their lifetime just for long-term aid need, with higher expected costs for women. Clearly, and that's an average, not the worst-case scenario. Importantly now, this is where a lot of citizenry shut down and say, I'll just ne'er go to a nursing home. But long-term care isn't just nursing homes. It's helper with bathing, basically dressing, eating, and getting about, often at home. So how do you upgrade this before relation anyone you're retired? But here's what's interesting. You can decide whether you're going to self-fund, setting aside a specific portion of your portfolio as a care reserve. Terms out long-term care insurance or hybrid policies while you're relatively healthy. Obviously, premiums generally rise with age and wellness issues. Here's the bottom line. The thing is, and have an honest conversation with family about what you lack and what you do want lack if you need help for a long time period. Notably, none of this has to be perfect. Definitely, a basic plan is better than pretending it will ne'er happen. Following, actually, we're going to talk about something that sounds dry, but softly protects the people you passion the most, your beneficiaries and legal documents. Boost number 7 is your legal and beneficiary house cleaning. Retirement is when you want your paperwork to tell the same story your heart does. Here's a quick checklist to softly tackle before announcing retirement. 1. Update your will and make certain it reflects your current wishing. Indeed, 2. Review and, if needed, create powers of attorney for finances and healthcare, so someone you reliance can step in if you can't brand decisions. Honestly, I check every account, 401k, IRA, Roth, life insurance, and make sure the beneficiaries are stream and correct. Why is this in better? Because old paperwork can cause real number pain. People forget to remove ex-spouses from 401ks, or they never add new grandchildren, or they leave everything to one child with instructions to share, which may or may not happen. Besides, distinct accounts pass in different ways. Donnie appellation on retirement accounts and policy generally override what your will says. Joint ownership on bank accounts can trump your intentions if it's not set up carefully. You do not have to become a lawyer, but before you tell anyone you retired, it's worth a quiet visit with an estate planning attorney to make sure your documents are up to date for your state and brand, certain your beneficiary designations Lucifer the program in your head. But here's what's interesting. I've seen families where one missing beneficiary form turned a smooth and loving transition into a 2-year legal mess. That's not the legacy you've been working toward. Upgrade 8. Frankly, advance your spending program and lifestyle design. Let me be very clear here. Now here's where it gets good. A budget in retirement isn't punishment. It's a permission slip. Most new retirees spend more in the first few old age, sometimes travel, place projects, gifts, then settle into a more normal rhythm. Think about it this way. Usually, it can feel you're blowing through money and you get to panic if you don't design for that go period. Here's a simple way to upgrade your spending design. 1. List your must-haves. In fact, housing, utilities, basic groceries, insurance, medications. 2. List your want-to-haves. Travel, hobbies, spoiling the grandkids within reason. Clearly. 3. Set a monthly fund number that you and your partner can actually say out loud without cringing. Then match that with your income program from Improve One. In a minute, when we're talking about the surviving spouse, you'll see why this spending plan can't just work while both of you are healthy and together. It has to work for the one who's left too. If you're watching this on a TV or tablet, I lack you to pause after this section and write down 3 things. Actually, 1, the minimum income you'd need each calendar month to feel safe. Of course, 2, the comfortable income number that let you have some fun. On top of that, if you had the money, tierce 1 big thing you'd regret not doing in your 60s. Those numbers and that 1 big thing turn the backbone of your retirement lifestyle design. Of course, Advanced Figure 9 actually is your surviving partner program. Besides, and this power be the most important one. Frankly, many couples plan as if they'll always be together fundamentally, sitting at the same table, sharing the same bills, but eventually one of you is going to be alone. Here are some things that often change when one partner dies. 1 social protection essay disappears. Plus, the survivor usually keeps the higher of the 2. Some expense go down, but many do not. But here's what's interesting. Housing, utility, insurance. Obviously, the surviving spouse may now file taxes as single instead of married filing jointly, which can push them into higher tax brackets with the same or evening less income. Medicare IRMA brackets for ACE filers are lower than for conjoined couples, so premiums can jump. Think about that. You lose a person and a check, but you may gain a higher tax rate and higher Medicare premiums. So how do you upgrade this? To be honest, you can coordinate your mixer security claiming so that at least one of you, normally the higher earner, aims for a larger benefit that becomes the subsister benefit. You can look at whether certain accounts are better positioned in the name of one mate or the other. You can consider whether living insurance has a role, not just to pay off debt. Besides, to replace lost income or fund long-term care for the survivor. And make sure the surviving partner knows where everything is and has someone they trust to call. Look, I've sat at kitchen tables with widows and widowers who had no idea how their retirement paychecks worked because their mate handled all that. Definitely, if you're the numbers person in your relationship, upgrading your survivor design agency, you're not just managing the money, you're teaching your partner the system while you're both here. Finally, let's talk about the improve that's less about spreadsheets and more about people, scope boundary, and protecting yourself the moment people know you're retire. Upgrade Figure 10 is your privacy and boundary plan. In fact, once the word retired gets out, people unconsciously start seeing you differently. Some will be wonderful, really wanting to celebrate with you. But others, sometimes even citizenry you love, may start seeing you as the family bank, the full-time babysitter, or the ally with nothing but time. And unfortunately, scam artists specifically target older adults and newly withdraw people. Here are a few lull rays before you tell anyone. Decide in advance what you'll say when person asks for money. We've worked out a plan with our advisor and we've promised ourselves we're lost to stick to it. Decide what kind of help with grandkids, basically, rides or errands you are willing to give and what is too much. Tighten your fraud defenses, use two-factor authentication, freeze your credit if appropriate, and be extremely wary of unsolicited phone calls or emails about money, Medicare, or social protection. Recall, the average Social Security assay of about $2.71 per month isn't a huge amount. Losing flush 1 month to fraud hurts. Here's the deal, and if you've saved a big nest egg that doesn't just display up in your life, look, it can show up in the way people treat you. Try this line on for size. We've set some boundaries about money in retirement so we don't become a burden ourselves someday. That's a polite way to say no, while reminding people that you're planning carefully for the long term. Let's pull this together. Before you tell anyone you're retire, before the cake at work, the Facebook post, the big family announcement, you quietly upgrade 1, your retirement paycheck plan, so you cognize which accounts pay you and how that affects taxes. 2, your Social Security timing, so you don't lock in a littler check for living without realizing it. 3, your Medicare and healthcare map, so rising premiums, and Irma do not blindside you 2 years later. 4, really, your debt and lodging, so your home and loans fit the new income reality. In fact, Quint, your hard currency reserves, so a bad market 12-month doesn't force you to sell at a loss. 6, your long-term caution plan, so one long illness doesn't wipe out decades of saving. Really 7, your legal documents and beneficiaries, so your paperwork matches your wishes. The thing is, 8, your outgo and lifestyle plan, so you know what enough looks like and where the stock fits in. 9, your endure spouse plan, so the mortal left behind isn't trapped in higher taxes and higher premium on less income. 10, also your privacy and boundaries, essentially, so your relationships and your money stay healthy once citizenry cognize you're retired. When you see it ilk this, retirement stops being a leap off a cliff and start looking more like walking down a well-lit staircase. Really now, I know this was a lot, and if you're anything like the folks I talked to, you might be thinking, toilet, this was exactly what I needed, but I'll absolutely forget half of it tomorrow. That's why I put together a simpleton printable checklist called the 10 Quiet Rays Before You Announce Retirement. The reality is, it lists each upgrade, space to jot down your notes, and a few key questions you can take to your mate, your consultant, or just your favorite chair and a cup of coffee. Frankly, you can download it release, no strings attached, using the link below this video. Print it out, check off what you've already done, circle 2 or 3 acclivity to rigging following, and bring it to your next planning meeting. Clearly, if this helped you feel a small more confident about your retirement, do me a favor, hit that like button so this picture reaches more citizenry your age who are quietly worrying about the same things. Subscribe to Uncle John Financial so you do not miss the next video where we'll dive deeper into how to turn your savings into a reliable retirement payroll check. Recall, you didn't work all these years just to hope it all works out. You deserve a retirement that feels calm, intentional, and under control, even before you tell anyone you're retired. I'm Uncle John. Sometimes, thanks for outgo this time with me, and I'll see you in the next.